The LME discloses warehouse inventories. You don't get the same sort of level of disclosure in the platinum group metals as you do in other commodities. But we estimate, as I said, there's about 3.8 million ounces of above ground stocks. Those above ground stocks are being depleted in order to meet the supply demand shortfalls that we're seeing at the moment.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vierra, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Edward Sterck, Director of Research for the World Platinum Investment Council, joins us today. Edward is here to give us some insights for Platinum's outlook with their newly released 2024 Platinum Quarterly. And we're delighted to have Edward here as a first time guest. It's time to saddle up and silver up for Edward Sterck. Edward, welcome to SBTV. How are you doing?
I'm good, thanks, Patrick. Thanks for inviting me on.
Glad to have you, first time guest. With that, Edward, if you don't mind, I'd like to start off with a bit of your background. Prior to joining the WPIC, you spent over 15 years in the sell side equity research, focusing on the mining sector, including coverage of the major global platinum producers and diversified miners. Can you share those experiences with us during those times?
No, absolutely. I mean, so, going back before that, I'm originally a geologist. But as you said, prior to joining the World Platinum Investment Council, I spent, about 15 years on the sell side covering mining equities. That ranged from uranium mining companies through the platinum mining companies and up to the global diversified Rio Tinto, BHP, and so on. The organisation I was at had probably one of the biggest mining franchises for sell-side research in the world, and also one of the largest sell-side mining-focused conferences, which was in Hollywood, Florida, every year. So, a lot of exposure to the management of the mining teams and also to the various different driving factors behind commodities and the feed-through impact on the underlying mining stocks.
All right, pretty interesting background there. So, Edward, I guess we'll simply start off with some of the numbers. Now, in the last 2023 quarterly update, it was stating that 2024 was showing to be another year where we were going to see a deficit in platinum and perhaps even a record setting deficit year. And I believe you have that new 2024 quarterly report hot off the presses. Therefore, what is the 2024 outlook for platinum? And if you could speak on that deficit.
No, thank you. So, yeah, we published yesterday our updated Platinum Quarterly, which is a publication we put out 4 times a year. Obviously, secrets in the name. It's produced for us on an independent third-party basis by a group called Metals Focus, and they also do similar work for the World Gold Council and also the Silver Institute. So, a well-renowned international organisation. In terms of the numbers, actually 2023 was the record year in terms of deficit, 878,000 ounces. To give you some context, the total market is about 7.5 million ounces, so that's a pretty meaningful deficit. Looking at the 2024 figures, we're still expecting a deficit. It is slightly reduced from 2023, so we're expecting 418,000 ounces for 2024. So, again, a pretty meaningful deficit. I guess there's some things I'd probably highlight within the 2 years. So just starting with 2023, that was a deficit that's very much been led by strong demand. So we saw automotive demand that was up pretty substantially year on year, about 16% versus 2022, and actually a record year for industrial demand for platinum. So perhaps just to kind of give a bit of an explanation to those two demand segments. In automotive demand, that's platinum that's being used in the catalytic converters that are part of the exhaust treatment system for internal combustion engines. And industrial demand kind of covers a myriad of end uses, everything from the petrochemicals industry through to the fertilizer industry, even medical applications, so cancer treatment, drugs, implants and so on, and then also the glass industry. So the manufacturing of high quality LCD screens and glass fiber and so on uses platinum in the manufacturing process. So a record year for industrial demand in 2023. Looking ahead to 2024, actually we see the deficit being more led by challenges to supply. So mine supply is expected to be down around 1%, around 3% year on year. Total supply down about 1%. Doesn't sound like a significant drop, but it's worth bearing in mind that's running around 6% below the preceding 5-year average. So very, very constrained. Recycling supply is also somewhat challenged in 2024. 2023 was about 25% below the preceding 5-year average. So this is a theme that's continuing through into 2024. And the challenges for recycling supply are a shortage of end-of-life vehicles. So effectively, consumers are running existing vehicles for longer. That means the catalytic converters are not being taken off those vehicles and recycled. And also some regulatory challenges in China and the US that are limiting recycling rates there. So overall, a very constrained supply picture, and we can get into this in more detail if you like. Actually, we think there's further downside risks to supply that feed into that significant deficit. On the demand side for 2024, we're expecting demand to be around 6% lower than 2023, so a bit of a step down. But bear in mind, as I said, 2023 was boosted by record industrial demand, and if we look at automotive demand in 2024, it's actually expected to be up by around 1% on last year. That's not a particularly big figure, but it's actually quite important and quite meaningful when you consider that we're expecting 3 million fewer internal combustion engine vehicles to be produced this year versus last year. So we've passed peak internal combustion engine, and yet automotive demand is continuing to go up. And the reason for that is twofold, principally continuing substitution of platinum for palladium in gasoline vehicles. So in the exhaust treatment system for gasoline vehicles, you can substitute platinum and palladium on a one-for-one basis. And then secondly, we've also got increased hybridization of the drivetrain. So when you take an internal combustion engine vehicle, turn it into a hybrid vehicle, you're typically operating with a lower engine temperature because the engine's being turned on and off more frequently. And to compensate for that, you need to add more PGMs into the catalytic converters to meet the emissions limits. So supportive overall of higher PGM demand for the automotive industry.
Okay, we will definitely touch on a bunch of those things in a bit, but I want to get back to that word deficit. Um, so there could be a supply side deficit coming from the miners, and I guess last year we saw a production deficit where supply could not keep up with demand. So platinum is kind of getting that deficit all the way around.
Yeah, absolutely. I mean, the challenges facing the miners at the moment are, well, there's a combination of them, but the biggest one is really the fall in the prices of palladium and rhodium that we saw through the course of 2023. So if we look at the sort of geology a little bit of the ore bodies that the platinum group metals are mined from, you don't have a platinum ore body or a palladium ore body or a rhodium ore body. These ore bodies contain all of the platinum group metals, and they are all produced from the same mines. And that means that the economics of those mines are dependent upon the prices of all of those commodities. So if you take the prices of platinum, palladium, rhodium, the other platinum group metals, gold is also produced from the same ore bodies, as well as the base metals, nickel, copper, and to a certain extent chrome. All of those feed into what is called the basket price. So that's taking the average price of all of those commodities and using that average price to estimate the profitability or otherwise of the underlying mining operations. Now, we saw the basket price fall by 45% last year. That was absolutely led by a collapse in the price of rhodium, which went from well over $20,000 an ounce down to around $4,000 an ounce. And palladium, which had peaked at over $3,000 an ounce and came down to below $1,000 at one point. So the economics of the mining operations have been severely challenged by the fall in those commodity prices. And the problem that creates for the mining companies is that if you look at the cost curve, somewhere around sort of 30 to 40% of the cost curve is in cash flow negative territory at current prices. Obviously, that's unsustainable. So we've seen a number of the major PGM mining companies announce restructuring plans. So far, that's mainly focused on trying to right-size the workforce to the operations. But there are some longer-term risks associated with that, and those risks are oriented towards how sustainable is supply going forwards. And so that kind of feeds into the downside risks to mine supply, which I mentioned earlier.
If you're enjoying this interview with Edward Sterck and I, please consider subscribing to our YouTube channel. And if you are looking for price exposure to gold, silver, and platinum, as we're discussing here, while fully being backed by physical gold, silver, and platinum with some of the lowest prices and premiums around, I'd like to invite you to look at Silver Bullion's product, Stargrams. Go to www.silverbullion.com.sg, go to the Precious Metals tab, and click on Stargrams. Okay, so I guess when it comes to mining platinum, you're not just mining platinum and you're not just dealing with the platinum price, you're also dealing with other items such as palladium and rhodium. So this is very different from, let's say, a miner who only goes after gold.
Yeah, absolutely. It's just the nature of it's the nature of nature. It's just where these metals are found in relative abundance. They're always found together. You do have some differences in different parts of the world. So South Africa is typically more heavily biased towards platinum and less so towards some of the other commodities. In Russia, it's effectively palladium and platinum are produced as byproducts of nickel operations. And then in North America, you've got two operations that are much more palladium heavy with a sort of platinum produced as a byproduct. And then the rest of the production from North America comes again from predominantly from as a byproduct of nickel mines.
Where do we find the highest demands in platinum? I know you spoke on automotive. Is that the industry with the highest demand for platinum?
So platinum demand is actually pretty varied, and these are rough numbers, and it changes year by year. So the figures I give you probably won't add up to 100% exactly, but 40 to 45% of platinum demand in any given year is going into the exhaust treatment systems for internal combustion engines, and we term that automotive demand. You've then got around 20 to 25% of demand in any given year that's jewelry related. Around 30 to 40%, depending upon the year, goes into industrial applications, and I outlined some of those earlier. I should add, included within industrial applications, there are other automotive uses, and that includes spark plugs and then sensors for engine system management, and actually with regards to battery electric vehicles for battery management as well. You've also in industrial demand got the new fastest growing end use of platinum, which is in the green hydrogen economy. And then finally, you've got investment demand. And investment demand ranges from up to around 20% in any given year, down to negative 5%. So we have had some years where we've had net disinvestment, and 2021 and 2022 would be examples of that. And that's where the disinvestment was led by outflows from ETFs after an exceptionally strong positive investment demand in 2020.
In your 2024 Platinum Quarterly, it was reported or noted that, excuse me, primary supply was reduced by an average of 2% or some 135,000 ounces, following various company announcements to defer growth and or restructure or idle production. So, having said that, what are some of the challenges that miners are facing? I mean, are the ESG challenges? I mean, as you mentioned, cost challenges.
So beyond well, it's I suppose it's really kind of a revenue challenge from the fall in the basket price. But look, I mean, costs are a factor as well. Undoubtedly, we've seen a period of pretty strong inflationary pressure across the world. Not just in mining, but I think we've all experienced it in food prices and other areas. And so that's been a bit of a factor for the miners. That's been slightly compensated for in South Africa by a sort of general ongoing weakness in the rand, which has helped a little bit. But obviously, that's only in terms of local costs. It doesn't help with raw materials, which are typically priced on international market pricing basis. The other pressures in South Africa in particular have been a shortage of electricity. So the state energy supplier there is called Eskom. It's been suffering from a number of problems for many years that have consistently worsened over time. Last year, we saw significant energy shortages. And the way Eskom managed that is by effectively enacting rolling blackouts, which they called load shedding. That's what affects residential users of electricity. For industrial users like the mining companies, they are subjected to something called curtailment, and that's effectively where Eskom calls them up and says, "We need you to reduce your consumption by X amount," and and then the mining companies have to reduce their consumption. The way they do that typically is by limiting the electricity flow to the smelters, but they continue to operate their mines and then the processing plants, the concentrators that take the ore and concentrate that to effectively a fine powder that's enriched with the metals that they're trying to recover. So they build up a bit of a working inventory of that work in progress concentrate ahead of the smelter, and they batch process that through the smelter when they've got electricity availability. And overall, the miners have done a pretty good job of managing that. If we were talking this time last year, we thought that was a real, almost existential risk to the miners, but they managed to get through that without too many hiccups. The electricity situation in South Africa has improved a bit now, but I think it'd be fair to say Eskom's problems have not gone away, and it's quite possible we could see the situation worsen again. Elsewhere in the world, there have been additional challenges. So in Russia, for example, there's one major producer there called Nornickel. Obviously, the world, ex-Russia and China, are not particularly friendly towards Russia right now, and there are a lot of sanctions that have been enacted against Russia. Nornickel itself and its PGM production has not been subject to sanctions. But that said, the flow of things like mining equipment and spares is subject to sanctions. And so that has created some challenges for Nornickel in terms of it had some pretty significant expansion plans for the future, which I think have been pretty much knocked on the head now. And additionally, there are risks to, particularly to large capital items, for things like mining equipment, drill rigs, scoop trams, and so on. They can pretty much pivot to China to go and get alternatives to the equipment it might previously have got from the West. But for large capital items like the ball mills that you use to grind up the rock in the processing facilities, those are typically very long lead time items. The drives on those often are from companies like Siemens. If that drive happens to fail, you're not going to be able to get spares from Siemens, and you're not going to be able to get a Siemens engineer in to come and fix the problem. So, I think there are some potential risks if those large capital items begin to fail in the future, which could feed into perhaps downside risk to Russian supply. In North America, there have been some challenges as well in some of the operations there. They've been more operationally linked. Things like problems with ground stability and shaft stability and things like that. And there's also generally a bit of a shortage of labour actually in North America as well, skilled labour within the mining industry.
Well, those are I'm listening to here, and they're all so interesting. I didn't know Nornickel was able to skirt the sanctions. I didn't know that. But if their parts should go down, it may be difficult to get parts in North America. There's not enough labor to go around and get in the mines. But having said these things, as far as explorations go, are, let's say, the PGM group miners, are they looking to explore new areas?
That's a good question, really. I mean, I think in the current environment, the kind of the appetite to invest capital in expanding production is pretty limited. We've got suppressed commodity prices. The irony is, of course, that actually for platinum in particular, over the medium to longer term, because of the growth in green hydrogen, we actually see significant demand growth over the course of the next 10 to 20 years. And the time frame it takes to bring on new production means if you want to be able to meet that demand growth, you've got to start making investment decisions now. But the environment is not there. It's not supportive to making those investment decisions, which could create some ongoing shortages in the future. That said, if we think about the geographic concentration of supply, 70% of platinum supply comes from South Africa, 11% from Russia, 10% from North America, and then the rest is kind of scattered across the rest of the world. For palladium, it's roughly 40 to 45% from South Africa and 40 to 45% from Russia, about 10 to 15% from North America. So, it's highly geographically concentrated. And certainly, I think in terms of future exploration, there are a number of companies out there that are looking for alternative sources of supply from a geographic perspective. And two areas of interest at the moment, Australia and Brazil. And also actually up in Scandinavia in the north of Finland. So, there are some junior mining companies that are putting some efforts into trying to, they found deposits, but trying to prove up the economics of those deposits and eventually bring them forward towards future production.
When it comes to, let's say, refining these metals, where are most of the refiners located?
So for the producer mining companies, most of them are vertically integrated. So they do the smelting and refining themselves. So that's predominantly in South Africa, in Russia, and then in North America. Some of the smaller guys do sell concentrate to or have it treated by third parties, so there's quite a substantial amount of refining capacity in Europe, in particular, and to a lesser extent in Japan. But quite a lot of the kind of smelting and refining capacity is not just associated with taking concentrate from the mines and producing metal out of it, but also with the recycling industry. So a lot of these smelters and refiners are taking spent catalytic converters, recovering the PGMs contained within that, and then as part of that business or ancillary to that business, they may also buy concentrate from miners and put it through the same processing facilities.
Okay, yeah. Speaking about that, with gold, it's been said that most of the gold ever mined still exists today in some way, shape, or form. With silver, well, it's more or less found in once it's used, the product life cycle is gone. Well, it ends up in landfills and then other places. But with platinum, is it more similar to gold, where much of the platinum mined exists today, or is platinum more like silver, where much of it ends up in landfills or as waste, such as with used car parts?
It's somewhere in between. I mean, the reason gold kind of accumulates is that, to be honest, it doesn't have many uses apart from a little bit in electronics and it's just residual store of value that we tend to apply to it for some reason. For platinum, given that it's used that bit more in industrial applications, there is a risk that the platinum is not recovered from those applications, and it does go, as you say, obviously end up in landfill. That said, actually, there's a significant amount of recycling that goes on within the platinum industry. So if we think about it from an automotive perspective, roughly 65 to 70% of the platinum that goes into catalytic converters is eventually recovered. The other 30% isn't recovered, not because it's not recoverable or recyclable, but actually just because humans are not, in certain geographies, not particularly good at essentially taking the catalytic converters off the vehicles and then sending them off to be recycled. So it's more of an issue with collection and aggregation of that material rather than the recyclability of it. Within the industrial end uses of platinum, it's almost a totally circular industry. So everything within that ultimately is recycled. There are some small ongoing losses that require being topped up with new supply every year, but it's pretty de minimis. It's sort of less than 1% a year. Overall, it's all completely recycled. So if we take a petrochemicals facility, for example, the catalysts within that facility, when you build a facility, you populate it with the platinum catalysts that you need in order to operate it. As I said, you kind of have to do effectively a bit of topping up every so often to offset any losses that occur through the production process. But the way that works is you populate the facility, and then once every 3 years or so, you take all of the catalysts out of the facility. They're now out of spec, so you recycle all of those catalysts, you add a little bit more PGMs back in, and then you create your new catalysts, and they go back into the facility to be used again. So it's an entirely circular process. And one of the interesting things, actually, that's the hydrogen industry is really trying to address at the moment is, it's a new industry, it's growing quickly, but they're very, very cognizant that they have to think towards a circular economy. So they're trying to design their electrolyzers and the fuel cells ultimately to be recyclable, so that the platinum group metals that are contained within the cathode and anode on those pieces of infrastructure can be recovered.
Okay, so I guess with the automobiles, electric vehicles, you're looking at, let's say, lithium, nickel, cobalt, other metals like that, and then with the hydrogen, I guess you're looking at a lot of platinum to be used in those.
If we separate out the hydrogen sort of supply chain, I suppose, at the beginning, you've got electrolyzers. So there's two main electrolyzer technologies that are used at the moment. And the electrolyzers, I should say, they take water, use electricity, hopefully from renewable sources, and then split that water into hydrogen and oxygen. And the hydrogen is then used as effectively an energy carrier that can be transported and either burnt directly as a replacement for natural gas, or you can use it in a fuel cell where it's recombined with atmospheric oxygen, and that process generates electricity. But the electrolyzers, there's two main technologies. So firstly, you've got alkaline electrolyzers. Now, that technology has been around for an extremely long period of time. It's very well established. These are large-scale facilities, and they're relatively low cost. The disadvantages of them is that they're not very good at cycling quickly. So if you've got variable power supply like you get from renewable electricity, the alkaline electrolyzers struggle to deal with that variability in a safe manner. The other technology is what are called proton exchange membrane electrolyzers, and those use platinum catalysts within them to accelerate effectively the process of splitting water into hydrogen and oxygen. And the advantage of platinum of PEM electrolyzers, proton exchange membrane electrolyzers, is that they are much better at cycling and dealing with variable power supply. So they're much more suited to being connected up to the renewable grid that's sourced that's powered with renewable electricity, because they can manage that variability. And so as a result, they are a little bit more expensive at the moment. We're seeing the cost differentials close. That seems to be the technology of choice for the future, and that's very much platinum-based technology. I should add that alkaline electrolyzers, which historically haven't used platinum catalysts, some of them now, in order to get higher current densities, are beginning to introduce platinum catalysts as well. So there may be some future demand pull from that direction too, although we're not baking that into our estimates at the moment. That's kind of a nice blue sky thing for the future, possibly. In terms of using the hydrogen, as I said, you can just burn it directly as an alternative to natural gas. I mean, an example would be in the direct reduction of iron ore, so helping to decarbonise the steel industry. But an alternative is to take that hydrogen, you put it into a fuel cell, and as I said, you recombine it with atmospheric oxygen, which uses a platinum catalyst, and that generates electricity. The platinum requirements for fuel cells are actually incrementally, substantially quite a bit more from a power perspective, in terms of, if you looked at a megawatt fuel cell versus a megawatt electrolyzer, you need a lot more platinum in the fuel cell than you do in the electrolyzer. So that's where the major future demand growth comes from. What can you use fuel cells for? Well, stationary applications, so as backup power supplies, for example, or you can use smaller ones in vehicles, and those are called fuel cell electric vehicles, and it's a technology that's an alternative to a battery electric vehicle. Fuel cell electric vehicles have some advantages over battery. Effectively, you've got tanks of hydrogen that you can consider as being just like a battery, effectively. But the big advantage is, rather than a 6-hour recharging time or whatever you have for your battery, you can refuel it in 5 to 10 minutes. So it's the same as filling up your car or with diesel today. It's particularly well suited for heavy duty or high capacity utilization roles. So long distance transportation, for example, let's say coast to coast North America. If you're to do that with battery technology, you've got to sacrifice a significant amount of your payload to the weight of the battery. And you've also got to stop to recharge, for extended periods of time. And there are question marks as to whether the grid, for example, will be able to accommodate the kind of rapid recharging infrastructure that's needed to be able to run large fleets coast to coast in North America. Again, that's just an example. Whereas if you used hydrogen for those sort of vehicle roles, you've got a few hydrogen tanks on the truck. You're sacrificing very little weight to the weight of the drivetrain, slightly heavier than the diesel equivalent, but not by much. And like I said, you can refuel it in heavy duty truck terms. Refilling with diesel is a 15 to 20 minute process. It's exactly the same for hydrogen. So your capacity utilization rates are as good as they are on the diesel equivalent vehicle, and your payload effectively is very close to being as good.
Wow, it's a nice story. Nice story happening with platinum here. Um, let's just say platinum relative to gold. We have seen platinum rise above gold, and we have seen platinum fall below gold. And with gold hitting all-time highs above 2,100 per ounce, do you see platinum catching a bid from perhaps even gold investors, since there is that not too long ago history of platinum outperforming gold, and currently it's at less than half the price of gold?
Well, I mean, the first answer is I'd say I hope so. But the serious answer is, if you go back, I mean, I should caveat this by saying I'm not really a huge believer in sort of ratios between things. But that said, if you go back to 1900, on average, platinum has traded at almost 2 times the price of gold. So, a pretty substantial premium. And obviously at the moment it's trading at quite a substantial discount to gold, which is abnormal from an historical perspective. So I guess the question is, why is that? Well, gold, has some attributes that platinum doesn't have. The biggest one is central bank buying. So central banks, obviously accumulate gold using it as a form of currency, effectively. That's not controlled by any other particular government, which gives it some relative attractiveness versus holding, dollars or yen or pounds or what have you. You just don't get central bank buying in platinum, so it's not getting that kind of boost at the moment. Platinum has also been suppressed, we would argue, almost artificially over the last 8 years or so, as a result of the fallout of Dieselgate. So if you recall, if we cast our minds back to 2015, Dieselgate, as it was termed, was when the regulators in North America and in Europe discovered that certain car manufacturers had effectively been trying to game the system in order to produce and sell cars more cheaply that were actually in breach of emissions legislation. And these were predominantly diesel vehicles, which is why the Dieselgate moniker was applied to it. At that point, almost 50% of the vehicle fleet, the light-duty passenger fleet in Europe was diesel. And historically, at that point, the major end use of platinum was in diesel vehicles rather than in gasoline vehicles, which is something that we've seen change quite dramatically over the last few years. The fallout from Dieselgate was that everyone went, oh, well, diesel must be terrible, even though it was nothing to do with the actual fuel. It was to do with how the automakers were trying to kind of sidestep the emissions control tests. So diesel usage in Europe fell off dramatically, and that really negatively impacted demand for platinum and effectively pushed the price down below gold and below the price of palladium as well. We're seeing that process begin to unwind now. So we've seen platinum being increasingly used in gasoline vehicles at the expense of palladium. And we've also got this extremely strong outlook in terms of growing demand from a new end source, which is the green hydrogen story. We think that as these deficits that we've talked to for 2023 and 2024 continue, and we see them continuing for a number of years in the future, and you've got the strong demand growth, obviously all the risks to supply, that will begin to feed through into the platinum price. And also, if you've got an attractive outlook from a supply-demand perspective, that should feed through to investment demand as well, particularly as we see interest rates fall off in the second half of the year, which makes non-yielding assets like commodities, including platinum, become relatively more attractive, I should say. Then investment funds we would expect to flow into platinum, and all of that kind of comes together to try and to hopefully help support the price and close some of that disconnect that we're seeing at the moment versus gold.
Right. Yeah. Great points there. I do recall that Dieselgate. I think there might have been a bug in the car manufacturer's tests, but we'll leave it at that. When it comes to let's say investment demand in platinum, investors who buy gold, silver, things like that, how much of a percentage of the supply of platinum goes to investors?
So it depends on the year, and I mean, it's worth mentioning that if you get significant disinvestment, it can effectively be a source of supply as well. But in an average year, it's somewhere between 10 and 20% of platinum goes into investment in various different forms. So bar and coin is an extremely popular form of investment. We're expecting this year to be a little bit challenged in terms of bar and coin demand, but over the last 4 years, actually bar and coin demand has been extremely robust. And we've seen significant demand growth from some new geographies as well as the traditional geographies of North America, Europe, and Japan. Added to that, there are exchange traded products. So these are physically backed financial instruments. Examples would be ETFs. There are ETFs listed in North America, in Europe, in South Africa, and in Japan. These are very attractive forms of investment because the cost is very low. And also, depending upon the geography, there's no tax associated with those investments. So platinum bars and coins in some geographies, Europe's an example, attract VAT. So, in Europe, typically that's about a 20% premium on the spot price you have to pay to hold bar and coin, but you don't have to pay anything to hold the ETFs. Obviously, the big distinction is you don't get to take delivery of the metal from the ETFs without paying the VAT, whereas the bar and coin you can stick under your bed or in the safe or whatever you want to do with it. But there are some geographies, and I believe I'm correct in saying Singapore is one of them, where VAT isn't so much of a concern, and so that makes bar and coin holdings relatively more attractive.
Okay, great. I appreciate that. I was going to ask you what are the different ways to invest in platinum, but I think you laid quite a few out there. So, what would be some key information for investors to know with the upside to investing in platinum and some of the downside risks to investing in platinum?
That's a really good question, and it is important to run through those, those things. I think, in terms of the downside risks, the price has been extremely suppressed and range bound between roughly 850 and 1100 since 2021, and part of the reason it's been range bound has been a combination of effectively, during 2022 and 2021, 2022, we saw quite a lot of disinvestment, which sort of suppressed the upside potential, even though underlying demand for other uses was growing quite significantly. In terms of 2023, actually, we saw really strong positive demand and, as I said, a record deficit. But what acted to kind of keep a check on the price and prevent it breaking out of that range was two factors. So, firstly, automakers, if we cast our minds back to the end of 2019, pre-COVID, had been anticipating delivering much higher levels of vehicle production than they eventually did. So vehicle production was suppressed by about 33 million light-duty units as a result of COVID and the semiconductor shortage. However, because they planned on higher production and they tend to have long-term offtake agreements for their PGM supplies, they had effectively contracted for much higher levels of PGM delivery than they eventually used, and that resulted in them accumulating excess inventories. In platinum terms, we reckon that was about 1 million ounces. So 33 million fewer vehicles equates to about 1 million ounces of platinum, excess platinum sitting in inventory. And so through the course of last year, whilst we had this colossal underlying deficit in terms of consumption, the automakers were able to offset that with that excess inventory and running down their purchasing or managing their purchasing plans to run down that excess inventory. We think that process has largely run its course. But that's a kind of best guess. We don't have visibility of these inventories. So I guess in terms of the downside risks, it's probably more that the price may not react to the underlying deficits for a while. We think the downside risks are fairly limited because we've been so range bound for so long, and all of the underlying fundamentals are looking so positive at the moment. The other thing that could keep things range bound is that we're seeing significant activity in the futures market, which suggests that there's a large amount of algorithmically driven CTA trading. And that seems to be acting almost to kind of self-perpetuate the trading range. So if you look at the futures positioning, when we get towards the upper end of that, sort of 850 to 1100 range, you see that the market is typically very, very long, and then it rolls over to being very, very short. And as we come down towards sort of the 850 level, that position reverses. And so that activity in the futures market, the risk is that it keeps things stuck within that trading range. What we kind of need is something to break it out of that range. Our expectation is that would probably be to the upside, and the biggest risks there that could shift things are the supply challenges that we spoke to earlier and the potential for lower mining and recycling supply versus current expectations. Obviously, you've still got the strong underlying fundamentals, and at some point when the automakers finish managing their inventory levels, we would expect that to result in tighter market conditions. But the timing of that is harder to call. There's one other factor actually that's worth mentioning, which is above ground stocks. So above ground stocks at the end of 2022 were around 3.8 million ounces. Now all commodities operate with above ground stocks. If you look at the base metals that are traded on the LME discloses warehouse inventories. You don't get the same sort of level of disclosure in the platinum group metals as you do in other commodities. But we estimate, as I said, there's about 3.8 million ounces of above ground stocks. Those above ground stocks are being depleted in order to meet the supply demand shortfalls that we're seeing at the moment. So one of the things to bear in mind is, there is material out there, but the holders of that material have, they've got value expectations that they need to achieve in order to supply that material to the market. So one would imagine as those above ground stocks are depleted, the value expectations of the holders of the residual amounts, is getting progressively higher. And we think that is something that should add to market tightness in time. But there's one other interesting factor associated with that. And if we look at trade flows and we focus on China, we can see that China's been importing significantly more platinum than its identified needs. And that means that the majority of above ground stocks on our estimates are now concentrated in China. There is one further factor associated with that that's worth bearing in mind. China has export controls on strategic minerals, and PGMs are classified as strategic minerals. So what's not clear to us is if we do end up with, ever increasingly tight market conditions within the platinum industry, how available are those above ground stocks to satisfy demand from the rest of the world ex-China? Can China actually export those materials? We think it probably can, but it's much more difficult to do that than it is to import them. And so certainly it would restrict the pace at which material is available to the rest of the world, which potentially could add to those underlying market tightnesses.
Outside of suppression, and you have a lot of brethren in the silver community who also see suppression there with silver. But outside of that suppression, how does platinum perform in a recession, or let's say, how should it perform in inflationary times?
So look, I mean, I think in a recessionary environment, obviously one would expect consumption to decline for commodities in general, and we can't escape the fact that platinum would probably experience some element of that. The areas that are most at risk fundamentally are jewelry. So consumers with less money in their pocket are less likely to spend on jewelry. But and then the other area is actually potentially investment. So if we look at what happened during COVID, when everything was highly uncertain, we actually saw really strong investment demand. And I think part of that was that actually people went into COVID in a relatively affluent position. We've seen a bit of an erosion of that over the last few years, and certainly the high inflation has fed into that. And so even though platinum is a store of value, and we're seeing some fairly uncertain economic times at the moment, it feels like actually a lot of the investment dollars that would have been applied to platinum have perhaps already been applied, and there's just less out there right now that's ready to be deployable. And this is particularly in North America, actually, perhaps less so in the rest of the world. That said, from an investment perspective, ETFs actually should perform relatively strongly. If we see a recessionary environment, and obviously that feeds through to rate cuts, that makes, as I said, the platinum ETFs look relatively more attractive. So it's kind of a bit of a give here and a take there. Perhaps a little bit less bar on coin demand, a bit more demand in terms of ETFs. But that said, if you strip out investment and you strip out jewelry, more than 80% of platinum demand goes into uses where it's reducing energy requirements and reducing harmful emissions. And if we think of where the world is right now and the energy transition we need to go through, those features of the metal are actually more important than they've ever been. So we, from that perspective, see relatively limited downside risk to demand, even in a recessionary environment. And if we think about how governments might try to stimulate economies in order to put on the defibrillators and get those economies out of the recessionary periods, transition technologies could be a key factor in that. So spending on expanding renewable energy generation, which requires fiberglass that uses platinum in the fabrication of that fiberglass, or focusing on the green hydrogen industry, putting more dollars to work in the green hydrogen industry. Again, that's something that's economically stimulating, but also helps with the energy transition. So, I think if governments spend money wisely, they can stimulate economies and help the help global decarbonisation process, and that feeds into supporting platinum demand. So overall, we're kind of relatively confident on the demand side that the outlook for platinum, even if we see a hard landing, is pretty well protected. Where we see the biggest risks right now are really on the supply side.
Yeah, great points. I'm getting ready to make a move and go get me at least an ounce of platinum coming up. Edward Sterck, before we wrap up, can you tell us how people can follow you on social media and follow your work?
Thank you very much. So everything's available for completely for free, all of our research on platinuminvestment.com. That's platinuminvestment.com. And you can also find myself and also the World Platinum Investment Council on LinkedIn.
All right, Edward, I want to thank you for your time. And if you don't mind, I'd like to check back in with you in a short while to see how Platinum 2024 is unfolding.
Sounds great. Love to take part. Thank you.
That was Edward Sterck, Director of Research for the World Platinum Investment Council. To follow Edward's research, go to www.platinuminvestment.com. If you like this video, please do subscribe, share, and give us a thumbs up. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.